Hi everyone, I am Sharada Mani, Assistant Professor, Department of Commerce. Today we discussed about the futures of current digital currencies. Okay, let's see. In uh, in futures of digital currencies, it examines the potential impact of these technologies on the global financial system, it considering factors such as regulatory developments, technologies, advantagement, and evolving user adoption. The analysis devolves into opportunities and challenges presented by digital currencies, including their potential to enhance financial inclusion, to improve payment efficiency, and foster innovations, while also addressing concerns related to security, privacy, and systematic risks. It having the it having to increasing mainstream assets. It like cryptocurrencies, bitcoins, ethereum having gained significant transaction as speculative investment and potential stores of value. Stable coins pegged to traditional assets like US dollar having have emerged as a means of facilitating faster and cheaper transactions, it particularly in the decentralized finance space. Okay, they have some key trends in shaping the future. The first one is regulatory clarity. The regulatory landscape for digital currencies is rapidly evolving. The government and regulatory bodies are grappling with how to classify the regulated these assets, balancing the need to protect consumer and maintaining financial stability with the desires to foster innovations. A clearly and consistent regulatory framework will be circular for fostering wide adoption and legitimating the digital currencies ecosystems. The next one is technological advancement. Ongoing technology advancements are driving innovations. The digital currency space and the layer 2 scaling solution are improving the scalability and transaction speed of the blockchain networks. It involves in cryptocurrency and security or enhancing the security and privacy of digital currencies transactions. The development of more user-friendly wallets and interface is making digital currencies more accessible to a wider audience. In institutional adoption, institutional investors are including hedge funds, asset management, and corporations are increasingly allocating capital to digital asset. It institutional adoption is providing greater liquidity and stability to market, as well as deriving future to innovation and development. CBDC development, that is central bank around the world are actively researching and developing CBSDD. They could have profound implement for the global financial system. It is a potential transformation payment system like enhancing financial inclusions and altering the role of commercial banks. Uh, and also the user adoption of the digital currencies is growing, driven by the factors such as increasing awareness, easy to use, and perceiving benefits. As digital currencies become more interacted into every life, their adoption is likely to accelerate. The potentials of the impact of the financial systems are enhanced the financial inclusion. The digital currencies can provide access to financial services for the unbanked and underbanked populations, particularly in developing countries, by lowering the transaction cost and eliminating the need for the traditional banking infrastructures. Digital currencies can make financial services more accessible and affordable. The next one is improved payment efficiency. The digital currency in hand facilitate the faster, cheaper, and more efficient payments both domestically and internationally. Blockchain based payment system can reduce the transaction times and cost compared to the traditional payments networks. The next one is innovation to the new business models. Digital currencies are fostering innovation and the development of new business models in areas such as DeFi, as tokenized assets and decentralized applications. This innovation has have to the potentials to transform various industries and create new economic opportunities. They have some challenges and risks are there. The first one is security risk and privacy concerns, validating and regulatory uncertainty. The systematic risk in that systematic risk, they whispered adoption of the uh, digital currencies could pose systematic risks to the financial system. Central banks and regulators need to monitor the growth of the digital currencies ecosystem and take step to the migrate potential risks. The next one is regulatory uncertainty. The lack of clear and consistent regulations for the digital currencies create uncertainty and hinder wider adoptions. Regulatory frameworks need to be developed that balance the need to protect customer and maintaining financial stability with the desire to forest innovation. Okay, so thank you for watching.